Yo, what's going on, everyone? It's Chase. We got an alpha-packed video today. Simple as that. We are going to talk about trading setups. I'm going to show you guys a low time frame setup, and I'm going to show you guys a high time frame setup. But we're morely going to be focused on the lower time frame setup, and then we will try to get into some analysis if we have time, covering potentially Bitcoin, Ethereum, S&P 500, ES. We know that. Okay, so biggest thing lately, and first off, I want to apologize, even though it's not really necessary, but for everyone who's DMing me, I very much appreciate that I've garnered a community of people who really want to learn how to trade, not learn how to get lucky on an altcoin, not learn how to get lucky or be early on something and just essentially just get lucky, right? So I very much appreciate all you guys who are aspiring real traders and trying to either get advice from me, or even some of you try to give me like setups that you think that are free money or whatever you want to say. So I am sorry, but I do not have the time most of the time to look at these DMs. I get at least, on a slow day it's 5, on a faster day it's 15 or 20 DMs of people showing me different setups. Would you take this trade? Are you going to do this? So again, I'm sorry that I cannot answer all these. As my account gets larger, it's just way too much. It's 10 DMs from sponsorship deals that are all scams, and I pretty much pass on every single one of them. You guys know the only sponsorship I have is Prime XBT, who sponsors these videos. Shout out to them. And that's about it. So 20 DMs a day, I just can't get to them, guys. I'm sorry. Anyway, so now let's get into the setups. The first thing we're going to do, and the reason this video has come about, I did an entry techniques video, and still people told me it was too confusing. They can't follow along. I mean, some people said that it helped them. I was glad to hear that. But overall, it just seems like I need to put out something that's extremely basic, and I'm going to try to do that today. And yeah, towards the end of this video, if you feel like I wasted your time or something, I invite you to unfollow and say it was a waste of your time, blah, blah, blah. I'm that confident that you are going to get something very good out of this video. The biggest problem I'm seeing is that so many people are focusing on 20 different assets when you really only need one. They have 20 different indicators on the screen when really all you need is 0. All you need is price. My indicator up here is just this black, these darker things to show the trading hours of the day. Okay, so all you need is price, and all you need is one asset. All right, 1 second. Some food stuck in my tooth. Okay, so this setup is, like I said, it's sort of from the entry techniques video, but we're going to break it down even more, and we're going to make it even simpler. First thing I want you to do when you look at this screen is I want you to look and tell me, where is the liquidity on the downside. Okay, we're not looking, let's cut the chart in half for now, and let's look at the bottom half of the chart. Where was the liquidity resting before today's session started? Okay, this is 9:30 a.m. where the darker shaded part starts. And where was the liquidity for the day if we were looking in the simplest terms? Well, if you had marked this in your brain, then you were correct. So this is the first part of the setup. We're looking to identify a major liquidity level. Okay, here it is. Here's liquidity. So, and I'm going to show you guys all different setups involving this. Okay, I have multiple examples, and we're going to look at it from many different ways. Okay, and so I'm just going to rip through this one real quick just to give you guys the example. So we have liquidity. Now, when we approach the liquidity level, what we want to be looking for is a market structure break. Okay, so this is a 2-part setup. That's it, 2 parts. You look for the liquidity sweep, and then you look for the low time frame market structure break. All right, now what is a market structure break? Well, the market structure break is when the market is trending in one direction, right? So we could see this downwards trend here, and then we're going to be looking for a low, a high, a lower low, and then a break of the previous low's high. Okay, now let's go over to the example that I have marked out or have drawn out, and I'll show you guys. Okay, so you have this leg down. Okay, let's just get out our little paintbrush here. Let's make it red. Okay, so you have this leg down here, right? Okay, first things first, leg down. Which chart is it? It's this one. First things first, leg down. There's your leg down, okay? We go back over here, leg down. First things first, leg down. Now, the next thing we're looking for is the actual break in market structure. So now we are looking towards seeing these lows and the lower lows and the highs, lower lows. Okay, so where is the actual break? Well, the break comes in here. You're going to have I want to get this clear here. You're going to have and we're going to try to color code this as per the other ones. Just let me draw it out and then I'll explain it to you guys. I'm trying to make this one more understandable than the previous one. It's hard with all these, you know, higher high, lower low, low high. I understand how it can get confusing, but I want you're going to look through all these and you're going to see hopefully that I color coded them, you're going to understand it better. So you have a low, you have a high, you have a lower low, and then you break the high, okay? That is your break in market structure right there, okay? Now I'm going to go through these examples. You have your low, you have your high, you have your lower low, and when it breaks the previous high, right? When it breaks this previous high, that's your break in market structure, that's your entry, okay? Let's go over towards this one. You have a low, you have a high, and I'm not cherry picking these guys. Look, low, high, low, high, low, high. There's the new low. So when you break this high, that's your entry, your market structure break, okay? That's the market structure break. Let's look at another one. You have a low, and again, not cherry picking. Low, high, low, high, low, high, low, high, lower low. Break in market structure, the previous low's high when it finally breaks, okay? And also, look, the downtrend that I spoke about. All right, now the downtrend is not 100% required, but most of the time you're gonna have that steep downtrend when you're looking for a break in market structure, okay? So that is the setup, the liquidity sweep, the market structure break, and then you enter. It's that simple. It's a two-prong setup, and then you're gonna target the previous support and resistance, or where the void was, essentially. You know, your big leg down. Okay, so look, this one's actually a little different. This is from today, right? So I'm showing you an example from today because I didn't want you to think I'm just cherry picking these from anywhere. It literally just worked today. So this one was a little different in the target, but if you entered right on the market structure break and you targeted, you know, say these highs, you know, if you're not hindsighting here, you might have targeted these highs and maybe you didn't get your whole trade, but just even pretend that you were targeting like a local resistance or something, you're getting 1.14R. If you're targeting these highs, you're getting 1.6R, okay? If you move around, you could see here, your low, your high, your low, your break in market structure. And then I was just making sure I'm recording, do all this work and not be recording. And then look at your big leg down here, right? And look at your previous consolidation, your previous support and resistance, and this you know, this downtrend void action, as I call it. And there you go, 1.63R, okay? So that's the setup, guys. It's that simple. Liquidity sweep, market structure break, enter, target the previous support and resistance, or where the void essentially leads you to. Okay, let's go over another one. Which one? Okay, Here's another one. Now this one is a little bit tighter, right? And these are low time frames, guys. We're on the 1 minute, we're on the 5 minute, we're on the 2 minute. Sometimes I'm on the 30 or the 15 second, depending on how aggressive the price action is. This is for low time frame stuff. All right, this is a low time frame setup. You're gonna see this. You don't even need to look at, you know, just like daily lows, right? I got to keep flipping through all these to figure out where I was. Is this today? No. Where's today? This one's today. Okay, so you don't even need to be looking necessarily just towards these lows. Once you get more experienced with this setup, you're gonna see that you can find this taking place in all different scenarios. Like, look at this downtrend here. There could be a play in here. I don't know. I mean, I guess we could break it down real quick. Let's see. It might not happen. It might happen. But we'll take a look. We're just going to break this all the way down. We had a low. We had a high. We had a lower low. Where's our lower low? Okay, so we actually had a low here as well, right? So we need to break this down even more because we need to see where the low is. So low here. Is this low, low? Okay, those lows are equal. So low, so this high, that high is your market structure break, right? Because you have low, the high of that low right here, okay? Then you have a lower low, okay? And then you have a break in market structure right here. So if you bought that market structure break and you put your stop below the low and you targeted, let's see, where would we have targeted with this one? Well, you had, you know, somewhat equal highs here, but that's not really good risk reward. And again, we don't want to completely cherry pick this, but you know, we could say maybe this high or something of that nature. And I don't even see, would it have filled? Yeah, okay, so it would have filled, and you would have got 1.82R out of it. All right, so as I'm saying, this setup appears tons of times on the low time frame. Okay, sip of water. It appears all the time. All right, it's a setup that works. It's simple. This is why you don't need 10 charts. This is why you don't need 10 indicators. All you need is a simple setup that works. It could be as simple, and I don't really use EMAs or anything like that, but it could be as simple as just an EMA cross, right? Whatever works for you is fine. Now let's look at another one. This is in the opposite direction. Market is trending upwards. Steep uptrend. Where is our high? Okay, well, this was the high before we moved up to a new high, right? So you have your high, you have your low, then you have a higher high. What happens right here? When you break this low of the previous high, you break the low of the previous high, what is that? That is a market structure break. Okay, you enter right when you get a market structure break, and where do you target? You target the void area in the previous SR. Okay, so you have your previous support and resistance right here, a big void down. And let's say you don't want to be that aggressive on the day and you just want to target towards liquidity, you would target towards here. You'd still get 1.68 risk reward, or you'd get 3 risk reward if you played all the way. See, and then it eventually taps it right there. Okay, so that is the setup. Okay, so now you can go through each one of these charts and you can look at it and it plays out the same way every time. Start on this one. High, low, higher high. Break of the market structure right here with the new low. Okay, break of the market structure right there. We enter, it goes down. Okay, on this one, you have a low, you have a high, you have a lower low. You have a break in the market structure when this high breaks the previous high. Okay, when you break that previous high, you have your break in structure. You enter right there. I'm not even talking about retests. I'm not even talking about potential 618 retracements that you could be entering on off of rejections here. There's more that you can do to this to get a higher hit rate and a higher risk reward, but I'm trying to make this as simple as possible. Okay, as simple as possible. I can't make it any more simple than this. So either I don't know how to explain shit, or you guys just need to watch the video over and over again until you get it. Okay? Turn off the air conditioner. Now I'm actually getting a little cold. Again, a low, a high, a lower low, a break in the market structure. Why? Because we broke the previous high from this low, you enter right on it, your stop is below the low, you target the large downtrend, the void, you get gains. Okay, we look over here. It happened over here. I pulled this one out of my ass. I didn't even have this one pre-prepared, and it worked. Okay, so it worked over here. We look over here. Low, high, lower, low. Oh, look, we broke market structure right here. You put your stop below the low. You target up here. Boom. You win again. And then here's your setup. Okay, it's the same thing. It's a low, it's a high, it's a lower low. You break the previous low's high. Okay, that's your market structure break. You enter. Right when it breaks, you put your stop below the low and you target the previous SR or the void, essentially, this area, the void, because it's just a big inefficient leg down. So you're thinking that, okay, it's going to be inefficient and fill right back up that way. Okay, and that is the setup, guys. It's that simple. It's a two-part setup. It's a liquidity sweep and it's a market structure break. It's going to have a higher hit rate when you're coming from higher time frame levels. Okay, just look. Where did this sweep come from? It came from here. Okay, liquidity sweep. Where did this sweep come from? Well, you had prior levels over here that would have helped you find it. Now look, you get liquidity sweep here, right? But you don't have a market structure break anywhere in here. Okay, so even if you have this low marked out from the previous day, even if you have this low marked out instead of this low marked out, that's okay, because you wouldn't have gotten a false signal because there's no market structure break. It doesn't need, like, you can have price acting below here and, sloshing up a lot of this liquidity and then finally getting your market structure break. Okay? And that can happen. There you go. Just a low, right? Where did this low come from? This low was from, this was an intraday low. Intraday low, liquidity sweep. We're on the 15-minute. Okay? Where'd this one come from? This one came from many hours ago. This one came from 15 hours ago. Liquidity sweep. Perfect. 15 hours ago. You can be ready and have an alert set for when this low gets ran. Okay? So this low gets ran, you don't need to sit at the computer all day long, right? And that's something we need to talk about too, in terms of once you do start to become profitable, you can't ignore life. And this is a different topic, but you can't ignore life and you can't ignore sleep and ignore food and all this stuff waiting for the picture perfect setup. So what you can do is you can just say, hey, look, I'm waiting for a sweep of this low. When that alert goes off, that's when you get on the computer and you start monitoring for the market structure break. Okay? And if you're spending the day on the computer, then that's when you can look for other setups within this price action. Okay? It appears everywhere. High, low, high, break in market structure. Wow, look, I just found another one. I wasn't even looking for it. High, right? I should have marked this first. High, low, higher high, break in market structure, shorted on the break, play it towards old consolidation. Boom, there's your trade. Okay, guys, there it is. I've marked it out a million different ways. None of that the pre-plans that I had, and I showed you even more on the spot. Well, I was just looking, and I'm finding them. Okay? Now, you're probably wondering, well, what is this chart that he's looking at? What is the E-mini S&P 500? Well, first off, I have a thread on Twitter. And second off, if you want to trade ES, you can trade ES on Prime XBT. That's my sponsor. I'll just show you guys that real quick. Let's see. If you're going to trade on if you're going to trade ES on Prime XBT, you'll need to, well, you don't need to, but if you want to support me and you enjoy these videos and you want more of these videos to be created, and then we're going to get into the high time frame setup after this, the high time frame setup for those who can't just, sit at the computer and whatnot. u.primexbt.com/cryptochase. You'll also see my link at the bottom here. And when you get on here, you're going to go to, make sure you don't deposit before you put the promo code in, okay? You got to get towards margin trading or something, and you'll open new account, and you'll click USDT or USDC, etc. And then once you click that, you'll confirm it. It'll go through, and when you get to the next page, you're going to enter promo code CryptoChase, okay? You're going to click activate and then deposit, okay? That is what's going to support me, and you can trade. If you want to trade ES, then you can do it on Prime XBT under the ticker SP500. Okay, that's not available on any of the other exchanges that I know of for crypto. So you can trade with crypto collateral, USDC, USDT on Prime XBT. Please, again, utilize my link and the codes, and that is going to support the channel and keep these videos coming. Also, if you appreciate this setup and this content, please go back and retweet and like the tweet. Okay, now let's move on, and obviously subscribe and like to the channel. Now that I've fully sold out, we can move on to the higher time frame setup. Now, high time frame setup. Where is it? Okay, so you don't have time. You don't have a lot of time to spend. Again, we're on an ES chart here. Why? I'm going to be honest with you guys, because crypto trades like shit lately. Maybe I'm just not putting enough time into it. Maybe I'm just preferring ES. That's my personal opinion. I'm not a big fan of trading Bitcoin or Ethereum right now. And I've been loving trading ES. It's been probably one of my most profitable months in my trading career, potentially. Outside of, like stupid bull run gains where you hit like a 20x or something. But yeah, why? Because ES just trades way cleaner. So I'm trading ES, again, SP 500 on Prime if you want to trade it. Or you could also trade it with a local broker in your area. Okay. Just keeping it simple, right? We're on a high time frame here. We could be on the 4 hour, we could be on the 1 hour. This is extremely simple, guys. Once again, I'm getting back to the point. This isn't to necessarily show you something that is like the holy grail, but my point is to show you guys that you don't need to go crazy with all these different indicators and charts and shit. Super simple, right? Like look at these breakdowns. Breakdown, you get a consolidation, you get a range forming. What you reject off the 618 to the 705. Simple as that. Okay. You have another breakdown, you reject off the 618, 705. Simple as that. There's another short. Okay, you have a big breakdown, you have a consolidation, you form a range. Why is it a range? Well, look at the taps. Tap, 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 tap. So you look for a range. Then you have a 618, you have a 705. It's a short. This was the FOMC short. Okay, actually comes back up and lets you tap it again as well. Look, guys, it's just a simple setup. Okay, it's a simple high time frame 618 retracement. The point is you don't have to go crazy with all these different charts and all this shit. Just find something simple that works, back test it a couple times, and start putting some funds on it. You don't have to go crazy with funds, right? You can trade on half risk or something while you're trying stuff out. You can trade on quarter risk. You can trade on eighth risk. I don't care what risk you trade on. Whatever makes you comfortable while you're learning and you're trying stuff, right? So while you're learning and you're trying stuff, you keep the risk low and you test it out and you see what's working. And you're probably looking at this and you say, oh, well, what if it, what happens where it didn't hit? Well, look at this down move. Well, you just didn't get filled. Look, it never came up to the 618. Okay, look at this down move right here. Well, you just never got filled. It didn't come up to the 618. Like big deal, right? You never, look at this one. Oh, you never got filled. It happens. There's going to be tons of times where you just don't catch a fill. But when you have these ranges and it pop back up, look where it's been rejecting from. It looks pretty consistent to me. Does it not look consistent to you? Okay. All right. Moving forward. We covered the low time frame setup. We covered the high time frame setup. And yeah, just to quickly talk, like again, as you become, or if you're, becoming a profitable trader, please do not neglect your life, right? This is super important. I've been through it all, right? I've neglected sleep, I've neglected exercise and food and all these things, and it's never worth it. Actually, you become impulsive with your trading and because the thing is, I know what happens is what's going to happen to you is you're going to see this setup forming, and you're going to need to go make breakfast or lunch, and you're going to want to skip it to wait for the setup. Don't. Just go. So you're going to catch some of them, and some of them you're not going to catch. You might go to lunch, and you might come back, and there might be an even better one ready for you, right? So don't skip things waiting for setups, all right? Now, I've done this. It's not worth it. You get impulsive. You start entering early. You make bad decisions. You close early, and then it goes to profit, and then because you want to go make food or something, it's like, guys, just live your life, right? Live your life. Have a dedicated 2 hours in the morning, 2 hours in the afternoon, or just have a dedicated hour in the morning, hour in the afternoon to look for setups. Whether it's this setup, that's extremely basic, and in my opinion, it's really, you see it a lot, but you do need to refine it a little bit. You want to be looking for, I typically prefer to look for 2 to 3 R, risk reward, right? That means if you're risking 100, you're gaining 200 or you're gaining 300. But, you're going to find ones that are 1.5, might be okay. It's really up to you. It depends on how high hit rate it's been working, if it's been consistent in the market. But again, don't skip out on life to look for these setups. You get your first taste of profitability, all of a sudden you switch to one chart and you start finding something that works, and when you miss it, you feel terrible about it. Just don't, guys. You have to just live. All right? You have to just live, and again, have an hour in the morning, have an hour in the afternoon. Sometimes you'll get trades, sometimes you won't. It's just the name of the game, right? Okay. Moving into crypto analysis. Just draw some funny lines, right? Where we're going, we're gonna need the Bitstamp chart. That's a pretty funny joke. I should post that one to Twitter at some point. Yeah, I had to whip out the Bitstamp chart the other day to see some of this price action, right? Because I'm on charts that only have PA from like here, or only have PA from here or something. So I had to whip out the old Bitstamp chart. If I had to take I'm just doing high time frame here, guys. If you want low time frame, honestly, I've been trading ES so much more low time frame. It's way cleaner. It's way better. I don't give a fuck what anyone says, to be honest. It's as simple as that. But we'll talk about some high time frame stuff for ETH. Where do I think ETH? I think ETH is going to do whatever the fuck in here. I don't really care what it does, and then eventually it's going to sweep this low, and it's going to rally up to about 2,800 to the 3K area, and this is where we sell again, and then who knows what the fuck it does for the rest of time, to be honest. That's my next big quote-unquote crypto trade. I don't know if this sweeps this and it leads towards all-time highs. I really don't. I don't foresee anything in the future outside of the Fed restarting QE that is going to give a major lift to these risk assets. In my opinion, it's going to be a couple years of downtime, and you better learn how to trade the lower time frames. That's my opinion, right? If you're just going to buy and hold, I mean, you might be, I don't know how old some of you guys are, but I don't have time to buy and hold. I'm not trying to be, I'm not going to give my age, but point being, if you're 20 years old, right, and you buy in here, so what, you want to be rich when you're 30? You want to be rich when you're 28? I mean, I don't know, that, of course, you're still young, but if you want to make some cash within the next, year, within the next 2 years, 3 years, I think you need to get your low time frame game up. And in my opinion, again, I've had many good times and low time frames in crypto. I just don't think that this price action here has been that good. I think it's pretty inefficient, and it's pretty choppy, and it doesn't give a lot of good opportunities. You could just play the Bitcoin sweep the low strategy, because that's all it ever does, is it just keeps sweeping lows and bouncing, and then it retraces. You just have to take profit real quick. Oh, okay, and Bitcoin. Let's see what Bitcoin does. Wow. It sweeps the low. So impressive. It sweeps the low again. It sweeps the low again. Oh, look what Bitcoin does. It sweeps the low. Okay, so sure, you could just trade liquidity sweeps, but you need to exit pretty quickly because the overall trend is down. Okay? And that's why, you're just, and these assets like Bitcoin and Ethereum, they just follow S&P. They're just pawns in the game of ES, aka S&P 500. So why be on these charts when you can just trade the real chart? That's how I see it lately. So anyway, back to what I was saying. Next crypto trade, buy Ethereum, I don't know, 600 700, 800, somewhere around there. It doesn't matter when you're in this area, and then sell it around 3K. But realistically, 2,700 is your first obvious resistance level. Why? Well, I think you have liquidity above here, and I think what you'll do is you'll have liquidity above here, right? And I think what you'll do is you'll sweep this, you'll come up, you'll reject from this liquidity, and you'll eventually flip this to support, and then you'll fill this void price action in here, and that's how you get to 2,700. Okay, that's F. Looking at Bitcoin, we go over to the monthly, and we just say, hey, where's an obvious level here? We need some consolidation. 12K. I don't know. I mean, look at this, guys. This looks like a company that's going out of business. It looks like fucking Peloton or something. Like these charts are ridiculous. If this was on the low time frame, I'd say, okay, liquidity sweep. Okay, swept liquidity here. You got a tiny bounce, super weak. If you get a retest of this area here, that's a short, and you're targeting the previous consolidation, or the impulse, the origin of the impulse up, right? So what is this? This is 29K. Yeah, so short 29K, target 12K, or if it just comes straight down, buy 12K, target 29K, something along that area right there. Simple as that. Don't overcomplicate it. Again, like I said, this chart looks like it's a company that's going out of business, and the low time frame trades like shit, in my opinion. And over here on the beautiful ES, you have just beautiful trades just shaping up, left and right, nice and clean. Good, good trades. Anything else that I want to say? Yeah, just be careful on ES when it comes to like days like FOMC and stuff. Probably shouldn't be trading. I mean, it can get really volatile really quick. Like this was FOMC yesterday. This shit'll wipe you out. Just be very careful about stuff like that. Try to avoid heavy news days probably. A little bit of news is okay to sweep liquidity, right? You can always use that stuff as confluence, right? Like you have a low, and you're like, oh, well, we have some news this morning. Oh, okay, the news sweeps liquidity. Look for your market structure break. You could probably still get your trade. That's how you use news to your advantage. Hopefully this has all been insightful. Again, please, if you enjoyed, appreciate this content, etc., go like and retweet the tweet. Sign up to Prime, throw a little deposit on there, take a couple of trades, take it off, whatever you want to do. Appreciate you guys very much. Hopefully this is helpful. Thank you, and have a great week. Peace out.